Life insurance is one of the most important planning tools for young families. So let's say we have a husband and wife, they're 30, they have $600,000 in debt between their mortgage and maybe some student loans. They have about $100,000 in investments, right? And let's say the husband works, the wife chooses to stay at home right now for a few years. If that husband was to pass away, they would have no income, right? They'd have to cover all the expenses, they'd have all the debt, they'd have to cover the funeral, all of these hard things, right? And so if they don't have life insurance, the family's gonna be in a really tough position. And please, please, please don't be the person that says, well, my spouse can just get remarried and we can figure it out. Because that's just not the reality of what's gonna happen. You want to leave your family in an okay spot. I understand not wanting to be like, oh my gosh, I want my family wants me to pass away so they can have more money when I'm gone. That's not what it's about. It's about making sure your family can live out the life that you wanted for them while you were still here. So in that example, how do you figure out how much you need? Well, first you're gonna look at the debt. Most people wanna pay off that debt. So we said $600,000, that's a really great start. And then we say, what else? Well, we probably need some income replacement for 5 or 10 years so that way my spouse cannot work, continue to stay home with the kids, and then eventually go back to work. So let's say you make $200,000, so you need about anywhere from $1 million to $2 million plus the debt. So that's like $1.5 to $2.5 million. And this is where people say, oh my gosh, that's a lot of money. Like there's no way that's affordable. Well, honestly, it is. If your health is in pretty good shape, you might be getting $1.5 to $2.5 million from anywhere from $40 to $75 a month, as long as your health is in a pretty good shape. So most often we see people with not the right amount of insurance simply because 1, they didn't know the right number, 2, they thought it was gonna be really expensive, and 3, they didn't really know where to go get it. So a lot of times people are just like, yeah, I have life insurance through work. And you're like, okay, great. How much life insurance? You're like, 1 time my salary. So that family would have $200,000 that couldn't pay off any debt, that would replace 1 year's income, and we'd have to figure out how the spouse would go back to work the next year, be able to afford all of that, still pay the mortgage, still pay down the debt, increase childcare costs. And that last one's really big. People don't think about this. So a lot of times for a stay-at-home spouse, they won't get life insurance on them because they're like, oh, well, they're not producing an income. But think about it. In this situation, if the stay-at-home spouse passed away, you would now have to figure out, how do I have childcare costs covered? So maybe I need full-time childcare for 2 kids. That could be $50,000 a year. In all likelihood, this family doesn't have that amount in surplus, and so they would be struggling. So a lot of times what we'll do here and say is, what would be that increased cost of childcare? Let's do that for 5 or 10 years. So let's get $250,000 to $500,000 of added insurance on the other spouse. And again, that's gonna be relatively inexpensive. A couple things I want to hit on here is why I like getting insurance outside of work versus inside. When you buy more insurance through work, 1, when you're young, you might be paying a little bit more because of other people who are on it. But 2, oftentimes it's not portable. So let's say you needed $2.5 million, you got the max they allowed, and they don't always allow that much. I've seen it where they only allow 500,000 or $1 million. You leave your job and you're like, oh gosh, I need more insurance. I'm gonna go try to get some private insurance. And they say, hey, you're older now, your health is worse, you're no longer insurable. And people think this doesn't happen, but it does happen. I've worked with double-digit clients who are uninsurable because of different health things that have happened. So I really like having people get that insurance early on outside of work, so that way they know that they're gonna have that for the 10, 15, 20, or 30-year term that they pick. The only time I have people buy through work is if they are uninsurable and they really can't get it outside of work. So next, let's go through the different types of insurance. The first one is term insurance. So it's exactly how it sounds. You get life insurance at a specific amount for a specific term, and that premium is the same the whole time. So maybe you're gonna get it for 10 years, 20 years, 30 years, etc. And it says, hey, you have to pay $50 a month. So as long as you pay $50 a month for the 30 years, that insurance stays in force that whole time. And if you were to pass away, that would get paid out to your family. A lot of people are like, oh my gosh, I don't wanna waste that money and pay it and get nothing for it. That's why I wanna get permanent life insurance. But the thing that people fail to realize is that permanent life insurance is way more expensive, right? If you wanted $2.5 million of insurance, that is for sure gonna pay out when you pass away. So you have to pay a lot in. So a lot of people like that and they're like, great, I wanna pay into this because that way I for sure get my money back. Cash value builds inside of these insurances. If it's an IUL or a VUL, that might be invested in the market. if it's just a whole life policy, it just kind of has this fixed rate of return. And so a lot of times people get sold on doing these policies because they won't lose money, it'll grow, and the cash value will build. But for me, I personally like for younger families to really focus on getting term because it's way, way cheaper to get the right amount. And then instead of having that money get invested in an expensive vehicle like a permanent life insurance policy, it can just go get invested in the market. And a lot of times that might end up being a better result in the long run. The other thing is that with these permanent life insurance policies, you have fixed premiums. So in a whole life policy, you have to pay the same amount every month. So if you want to start a business or something happened to your family, you lost a job, you don't really have a choice but to pay it, or it's going to start eating at that cash value to cover the insurance costs. A lot of policies of IULs, et cetera, end up imploding because people don't have the funds to end up paying them down the line. So I really like term better than permanent in most situations. The times where I really like permanent life insurance is honestly for high net worth individuals. So you have a family, you have $50 million of real estate, you're going to pass away. Well, they owe 40% estate taxes on an illiquid asset. And so permanent life insurance might be the opportunity to say, hey, that will pay the taxes for us. So we would have to figure out how to sell the real estate really quickly or at a really bad time. The other times that it might make sense is for special needs children, or if you were like, hey, I want to make sure I give an equal amount and I'm going to get 1.5 million, I want 500,000 to go to each kid, and it keeps it pretty simple. So those are the situations I like permanent better. So at the end of the day, I like term. Term is better for younger families in most situations. You want to make sure you get the right amount to cover what you need in the future. It's often a lot more than people think, but the cost is often a lot less. But make sure that you're thinking about this and protecting your family. Thank you for watching. If you enjoyed this video, please leave a like and go subscribe to my channel for more personal finance content. And as always, please leave your thoughts in the comments below, and I promise to get back to every single one of them. We'll see you back next week.